Now this is the fourth lesson in the series, and it's really just a reply to somebody who replied to watching one of the last videos I did, and in fact it's the only negative one I've had, so I thought I'd do a reply to it. And it says, if this really worked, you would use current charts. Well, unfortunately, you only know that something's worked at a level with the benefit of hindsight, so it's a bit difficult, but what I've decided to do is show you some current charts. I'm sure you can always find a chart that would show you what you want. Yes, totally right, you can, very, very easily, and it's what most people do. And then it says, little rules you want to keep to yourself should apply to this voodoo scheme you are trying to sell. Keep it to yourself. So he thinks it's a bit of voodoo. So what I thought I'd do is I'll show you some examples. I'll even show you some trades that I've done myself, just using this incredibly simple rule. But as I said in the video, lesson number 1, it is not this simple. All I said was that 50% falls or 50% rises are important points to look for a change in trend. I didn't say they always work at 50%. In fact, I made a strong point to tell you they don't always work at 50%. And in fact, if you put up, say, 100 charts and you applied the rule, you might only find 10 work. And as I said in the first video, the secret is knowing when it's going to work at 50 and when it's not going to work at 50. Okay, so let's have a look at an item. Now, the reason I'm showing you this one is because it just recently worked at 50%, so it's quite useful. Now, everything works in its own unique way. Gann called it his master time factor. Now, nickel works in a certain way, copper works in a certain way, the pound against the dollar works in a certain way, Barclays Bank works in a certain way, and the secret to making money is finding out how it's worked in the past to give you a fighting chance on how it's going to work in the future. Now, what we're looking at here is a weekly chart on nickel, and it made a major high in 1987 and had a big fall from this high here and started to fall. Now, as it started to fall, what would you do from a Gann point of view? Well, on the one very simple rule, and as I said before, it isn't this simple, I would take away from that high the first percentage that Gann wrote about in his book, which is minus 50%. And what you should be able to see is that it fell exactly 50% and happened to be the exact bottom, and the price of nickel went up like a rocket. So that was a good example of trading at 50%. There is a mathematical reason why the market bottomed out here, which was another Gann number that he mentioned. So there are other numbers apart from the ones I've told you about. However, seeing the thing was only about basic mathematics and one of Gann's simplest rules that most people can understand, just to keep it simple, that's all I've really done. Now, what I'm going to do now is I'm going to bring the chart up to date, and we're going to do the same thing, just using this one rule. And I would never ever buy just on this one rule. I'd need at least 3 or 4 reasons to go and buy using different rules of Gann's. However, this is the recent weekly chart of nickel, and I thought that this was a buy here. Now, there's more than one reason, but on the rules I gave in the previous videos, this is the reason. Well, first of all, the most important high on this is actually here. I think that's the historical high. I don't think it's ever been higher than that. And then the market starts to collapse. All bull markets collapse. So whenever you see something up like a rocket, everyone will justify it that it's going to go on forever. But markets always fall a lot quicker than they ever rose, even though you don't think it's possible. So why did the market show resistance here, and why did it show resistance here? And how would you have known that maybe it might show resistance there? Well, I would take away 50%, and you should be able to see that nickel fell 50%, then it fell 50% as buying opportunities. That, when it fell through 50%, would be a shorting opportunity. I would cut the line when they get broken to stop me from fitting lines in, which is what the vast majority of people do who do technical analysis. So why did I go and say that I thought that that was a possible buying opportunity? Again, there is a major reason from the all-time high, but I haven't told you what that is, so we'll keep it simple. Here we've got what Gann called a triple top, 3 tops at the same level, which is a very weak sign, and I would go to that high before the market ever got there, and I would take away minus 50%, a long time before it ever got there. And how far did it fall exactly before it's had this rally just recently? It fell exactly 50%. However, I might put up something else, like off the top of my head, I can't think of anything off the top of my head, say copper, and I might not believe that one works on 50%, and therefore I would never trade on 50%. So it isn't that simple, but it is an important rule that can hopefully improve your trading. Another recent example I can think of off the top of my head is another metal, which is nickel, but this I've picked because it's the reverse. What's happened here is this one has found bottoms, taking away 50% down from highs. This one, not nickel, sorry, it's going to be the same chart. Lead, sorry, not nickel. This is lead. Okay, so what would I do on this one? Well, this is the historical all-time high in 2007, and as I said before, all bull markets come to an end and will collapse, and I would take away on the way down 50%. In this particular case, when it got to 50%, it went straight through and showed no resistance. That makes the next level that I believe is going to work down here a little bit further to be important for the future. However, let's look at the daily chart. I might have bought it at 50%. I didn't actually do it, but I might have bought it here. It went up for 3 days, but I would have a stop loss below 50%, so that if I'm wrong, I take a small loss. And the secret to making money is when it doesn't work, you take small losses. The great thing about the work of W.D.Gann is I knew that if it went through 50%, there's no point staying in the market, that I'm wrong and I should get out quick. So I would have a stop loss below there, say where I put the black line, and if it hits it, then basically you get out, which would save you quite a lot of money. In other words, I took a small loss. But the secret to making money is not just making small losses, it's when you're right, you've got to make big profits. Okay, so for instance, why did the market top out here on the daily chart, and why did it top out here, and how would you have known that maybe there was a strong chance that it might top out there, and to move your stop loss quite close to protect yourself at that level if it was to get there? Well, this low here should have a mathematical relationship to its future high, so I would add 50% to its low, and you can see that it rose 50% to give you the next high. Right. Now, I did those videos back in January 2003. We're now talking about we're talking about 2008, 50% rise, giving us this high. Also, this low in July, just recently, I would go to that low, and I would automatically, as the market starts to rise, I would add 50%, and you should be able to see that lead rose exactly 50% to give us the exact high. Again, a rule that I've been talking about all my working life. So I started investigating that back in on gold, really back in about 1982, 1981, and I've been saying the same thing consistently for donkey's years, and you can see that it still works. A trade I made just recently for our clients is I bought this stock. Now, it is not the only reason why I bought this stock. It is one of the reasons why I bought this stock. Now, this is Peter Hambro Mining. Now, I could see that some of the metals have been giving me buy signals because of falls of 50%, and so maybe that would give me some mining stocks that might be interesting in the future. Now, this is the major high that it made in October of 2007. So what would I take away from that high? I would automatically, among other numbers that I've not told you about, I would take away 50%. And the reason I bought Peter Hambro Mining was because it fell 50% from its major high. I actually entered the trade here, and at the moment I've got a stop loss below this low. It's a bit lower than that, but it's roughly below that low there. So if I'm wrong, in this case I'll probably end up breaking evenish. I'll take a very, very small loss if it does go against me. But I will stay in that until I get stop lossed out using Gann's stop loss techniques. So that's the most up-to-date you can get. So I hope that shows that it's still working without the benefit of hindsight, which is what most technical analysis is about.